The next exemption that we'll be looking at is section 10102, the working outside of South Africa exemption. Now, a lot of you will be familiar with this section. A lot of you might have also heard about this section. And this section has been in the news a lot over the last couple of years. For a lot of people complaining about it. But you'll see, for the most part, this section will still not affect as many people in a negative way. This section applies if a resident of South Africa who is an employee does work outside of South Africa for a period of time. Okay, so let's start at the top and go through it bit by bit. So the first thing that we all know is that if you are a resident of South Africa, you are taxed on your worldwide income. So that means, for example, if Mr. X, who is a South African resident, goes and does work in the USA and he earns income for the work he's done in the USA, that income will be taxed in South Africa, because the gross income definition does not tell us it must be a source in South Africa if you're a resident. It just tells you it's your total amount received by or accrued to a resident during the year of assessment, which is not capital in nature. Now, just as a side note, please remember, guys, always that if there are double tax agreements between the countries, that will always overrule this. So if the double tax agreement between South Africa and the USA says that a person doing work in the USA must be taxed in the USA, then we have to follow that advice. Right? We're not studying it like that now, we're just looking at the act. So, this person, if you go and work in another country, and earn income from it, that income, although it's from a different source, potentially, is still taxed in South Africa. But what this exemption tells you is that up to 1.25 million that is earned by a South African resident whilst working outside of South Africa will be exempt. Now, this is one of the big things when I mentioned earlier that this section has been in the news. One of the big changes to this section is that there's now a limit. There used to be no limit. So if you earned 100 million rands, for example, it would be exempt. Now it's only 1.25 million. Understand what this also means? Let's say you go and you earn 1.5 million rands. And if this section applies, that means only 1.25 of that is exempt. So the 250,000 rands that remains is not exempt. Okay, that's just what this means. Okay, so up to 1.25 million will be exempt, but these are the requirements. It will be exempt if, first of all, this person must be employed. So you must work for someone. So Mr. X must be employed by someone. If Mr. X just goes and works overseas in his own, he's a sole proprietor, this section will not apply. So let's say that I'm an artist, a singer, and I go and I sing overseas, and I get paid for the stuff I'm doing overseas. That will not be exempt because I'm not employed by someone. But if I am an auditor and my firm sends me to America to go and audit a company there, this section could apply, for example. So the first requirement is you must be employed. Just note here also, this employment they talk about here does not apply to a person who holds a public office. So, for example, if you're working for the South African embassy in another country, it doesn't apply to you. Okay, can't work for the government. So you must be employed, and you must be outside of South Africa for more than 183 full days in aggregate. So it means in total during a period of 12 months. Now, basically how this works is, let's say you get paid on 31 April, just using as an example. This 183 full days, they don't tell you if you must look back or if you must look forward. So if you go and look at the interpretation note basically says, take it from this date backwards and see if you meet the 183 days. If you don't, then look forward 183 days, right? And if not, you consider any period. So from this period until this period was it 183 days. So as long as as long as you can prove that you received this at the beginning, end, or somewhere in the middle of 183 days, you can qualify for it, right? And at least 60 of those days must have been for a continuous period, must have been outside of South Africa. So what does this mean? It means that this 183 full days, let's say you go in January and February, you are in the USA, then you come back in March, then you go again in March in South Africa, then in April you go to the USA again, then in May, June, July you in South Africa, right? Then you go again in August to the USA, and let's say from August until December, right? You are in the USA. I don't have the days offhand now here, but what I'm trying to illustrate to you is those 183 days, each time you're in the USA, they count it, they count it, they count it. That's fine. So if you 5 days in the USA and you come back, and then later you 10 days, then it means they count it as 15 days. But there is a requirement that at least 60 of those days must be a continuous period. So January and February is 31 plus 28 days usually. That's 59 days. So you don't meet the requirement there. April is 30 days. Don't meet the requirement there. But then when you go August until December, August, September, October, November, December, that's 5 months. So that's August plus September plus October plus November plus December. You can see there's at least 60 days of those days you were outside of the country continuously. Then you'll meet these requirements. So you can't have a situation where you go outside of the country. So let's say you go and do some work in Zimbabwe. You're from South Africa. You can't go and you say from Monday to Friday you're working in Zim, and you come back on the weekends. Every weekend you come back. Then you will never meet this requirement, the 60 full days, which you must be outside for a continuous period of time. So all 3 of these requirements must be met. If all 3 of those requirements are met, up to 1.25 million that you earned, and it must be for the work you're doing outside of South Africa, so during that period, that will be exempt. A special section was then also introduced. This is still section 10102 for the period of February 2020 to February 2021. Because due to the COVID-19 pandemic, a lot of people were not able to meet the requirements of being outside of the country for 183 full days. Right, so just this section we're going to talk about now. People couldn't be outside the country because they were forced to go back to their countries, and there was lockdown and so forth. So what they did is they had a special rule. They said, for the period that ends on or after 29 February, so from this period to the period on or before 28 February 2021, this period. So for this period, as you can see I've done here. If any period ends here, so let's say you were outside of South Africa, you were in Zim at this date, and you came back here on, let's say, 30 April 2020. For this period backwards, if you were outside for 117 full days, so instead of 183 full days, it's 117 days. If you were outside for 117 full days, then it will still be exempt. Just please note, guys, this section only replaces this 183 full days section. You must still be employed, and you must still be outside for at least 60 days continuously for this to apply. Right, so it's just 183 full days section. The next exemption that we're looking at is the bursary exemption, and that's discussed in section 10.1q and section 10.1qa. Please note that this section works the same for section 10.1q and section 10.1qa. The only difference is that section 10.1q applies to persons who are not disabled, and section 10.1qa applies to persons with disabilities. The principles are exactly the same between them. There might just be some amounts which are a little bit different, which you like to see. So this is a situation where a person gives you a bursary, so you receive a bursary amount. Right, so let's say you receive 20,000 rands as a bursary to study. If this section applies, then that bursary will be potentially exempt, let's say, like that. Now, when does this apply? The first thing that I want you to see over here is that there is no exemption available to you. If the employee receives this, if their salary or the remuneration, whatever they earn, had to be reduced, or any future salary would have been reduced by the amount. So what do I mean by that? Let's say you should earn, let's say you are entitled to a salary of 400,000 rands a year, and they give you a bursary to study of 30,000. But now they say, instead of you earning 400,000 this year, you will earn 370,000 rands as a salary, and then you'll get the bursary as the excess, or as the difference. So that's 400,000. So they say you still earn 400,000, but it's now just 370,000 of that's a salary, and the bursary is 30,000. Right. So any situation like that where they say your salary is actually 400,000, but we now give you a salary of 370 and just call the other amount, the difference, a bursary. If that happens, then no exemption is available. So this is just an attempt to also stop employers and people from trying to manipulate their earnings. Okay, so just bear that in mind. If they see anything about a salary reduction or a salary sacrifice, no exemption is available. All right, now guys, in all of these sections, you'll see I've given you the section references here. But in all of these sections, there are three broad categories which applies. The first category is it's a bona fide bursary which is given to any person. So this is, let's say, Anglo Gold says we are giving a 100,000 rands bursary to the best mining engineering student, to civil engineering or whatever it might be, mining engineering student. So how do you get the bursary? By being the best student. So that is open to any person, because any person can go and study for this and try and qualify and be the best student, and you get that. So do you have to be an employee of Anglo Gold? No. It's open to anyone. That's what that first one applies to. If you get that type of bursary, it is exempt. Okay, so there's no special rules. It's just completely exempt. Both of these other bursaries applies somehow to an employee. The first one is the bursary is given directly to an employee. So you are working for KPMG, let's say, and KPMG, so it's a professional services firm, auditing firm. KPMG says we are giving you a bursary to employees to study their masters in tax, let's say. So that goes to the employees. That's what this refers to. Or the next one is if the bursary is given to the employee's relative. So let's just say you still work for KPMG and they say we give a bursary to employees' children to pay for school. Something like that. So the big difference between these ones is this one, it's not to employees, but the rest are somehow to employees. So again, if this situation was given to an employee's relative, the employee is the person that will be taxed on that. Okay, because it's because of your relationship with KPMG or with the employer that you get it. Okay, so how does the exemption work? So if it's to any person, it's fully exempt. If it's to an employee, it's also exempt, but there's a requirement that the employee will have to reimburse the employer if the employee does not complete their studies. So KPMG gives it to employees to study their masters in tax. You now go and you say, great, you're going to sign up with, let's say, UNISA to study your masters in tax. And KPMG gives you 50,000 rands as a bursary to do it. That first 50,000 will be gross income. Will it be exempt? The question is, if you don't complete your masters, is there an agreement that you will have to pay it back to KPMG? If that is the case, then it's exempt. If KPMG says, listen, if you make it or you don't make it, doesn't matter, the 50,000 is yours, then it's not exempt. So the idea here is that it must be a proper bursary that's tied to your performance, the requirement to pass. Again, this doesn't mean it's only exempt if you pass or if you fail. It just means that there must be the requirement that should you fail, then it will be exempt. So then whether you fail or whether you pass, the amount will be exempt. Right. If it goes to the relative, then there are certain thresholds that we have to apply. So here we go. So this is the bursary to employee's relative where there's no disability. So the first thing that they say is it will not be exempt if the remuneration proxy for the year exceeded 600,000 rands. Now the remuneration proxy is defined in section 1 of the Act, but they will give you what the amount is in the test or exam. Just in a nutshell, it's basically your previous year's salary. But if they tell you just what the remuneration proxy is, just use what it is. So what does this mean? This means that if you earn 600,000 or more than 600,000, it's not exempt. So again, I'm going to use the example here. The bursary is given to employees to pay for school fees. This is my example here. So what they're trying to say is, if you earn more than 600,000 rands, you earn enough. This is almost the idea of the way of thinking about it. You earn enough to pay for it yourself. Therefore, it's not exempt. If you earn less than 600,000, then it will be exempt. Okay, so if your remuneration proxy is less than 600,000, then this is the maximum amount that will be exempt. It's 20,000 rands if the bursary is for grade R to grade 12. So for school fees, like what I said here, 20,000 will be exempt. If it is for NQF levels 1 to 4, right? So if that's the studies that you're going to be doing at university, 20,000 is exempt. And if it's for NQF levels 5 to 10, 60,000 will be exempt. Now, these NQF levels, or the grades, will be given to you in school, in your test or your exam. Okay, so here's the first example. X Limited gives relatives of employees a bursary for 50,000 to study an NQF level 6 qualification. The employee's remuneration is 650,000. So because the employee's remuneration exceeds 600,000, it is not exempt. So that 50,000 rands will be included in gross income of this employee. Example 2. X Limited gives a relative of an employee a bursary for 70,000 to study NQF level 6. Employee's remuneration is 300,000. Okay, so the first thing is the gross income will be 70,000. And how much of this will then be exempt? It's an NQF level 6, so 60,000 will be exempt. Okay, same principle applies when there's a person with a disability, so section 10(1) QA. Still the 600,000. The big difference here is that the amounts are different. So it's now 30,000 for grade R to 12, 30,000 for NKF levels 1 to 4, 90 for NKF levels 5 to 10. And it's the same type of example.